YouTube, welcome back to the channel. This video is going to show you guys a version of the happy trail strategy that uses multiple time frames. Some of you guys may have watched this video. I'll link it here in the right hand corner. That video will show you guys the version of happy trail that I had previously explained, where you would trade it but as a breakout strategy. This version of it expands on that video. So if you haven't watched that video yet, go ahead and watch it. If you have watched it and you had questions about like how do you do the like free version, what I mean by that is how do you break down all of the indicators that actually make up the happy trail indicator and how do you trade them separately, I will review that in this video for you guys. So if you watch that video and you were like, yeah, but like you didn't show all the indicators specifically, a lot of you guys had asked for that, I will show you guys in this video how to do that, and I'll show you the settings. I'm also going to show you guys how to now add in another time frame. So adding in a higher time frame from your entry time frame and using the stochastic RSI on that time frame, the higher one, to help weed out some of the trades on your entry time frame. If you guys have ever seen a previous video that is no longer on my YouTube channel, but some of you have asked, it was called like a superstar strategy. This is literally the replacement of it. It's just more condensed. It's a little bit easier done without having so many indicators all over the place. If you are looking to get access to the happy trail indicator, that is the smiley faces that you will see. Those are available on the trading floor website. So that is this website here, the www.trdfloor.com. The link is also in the description box below, so if you guys are interested in getting this indicator, you can get it as part of your membership to the trading floor. If you guys want to know more about the trading floor and the perks and the benefits that you can get with being a member there, go ahead and check out this video that I'll link here in the right hand corner, and that video will tell you guys all about the benefits of being a member in the trading floor. That is basically the community and the Discord group where myself, Brutus, Artie, and a bunch of other traders that many of you guys follow are there. That is where we work at, where we answer questions and interact with other traders who are from the community. So if you guys are interested in that, go ahead and check out that link. And like I said, this indicator is one of the 5 indicators that are customized that you guys get as part of the membership. There's a bunch of other perks that you can learn about when you guys watch that video about what you can get in the community. The smiley faces are a little bit more customized. We kind of took them and tweaked them a little bit, but I will show you guys the free version. So if you are not a member and you don't want a subscription, you can still trade this. So don't worry, I got you guys. I will show you that in this setup as well. So please make sure that you're really paying attention right now. Like, I'm gonna pause for a second. Pay attention. Okay, so everybody's paying attention. There are 2 versions I'm going to show you. There is the version that is made with the smiley faces. That is the happy trail indicator. That version is for the people who are members in the TTF community. That's the trading floor community. If you are members there, you do not need to throw on all the other indicators I'm going to show you. If you are not a member and you don't want to be a member or whatever, you don't want to go through all of that, I totally understand. No worries. I'm going to show you all the other indicators. So there is a second version I'm going to show you. Please do not confuse yourselves. Make sure you understand there are 2 versions I'm showing. You only need one of them. Figure out which version you yourself need. Don't throw all of them on because you're just going to be like way over cluttering your charts. Okay, so jumping into what this strategy is about. Number 1, I know you're going to ask me, does it work on crypto? I have no clue. No idea if this works on crypto. I will look into looking at it, but the truth is the next priority is working with it with Forex pairs. So the answer is I have no idea. Does it work with indices? Absolutely. It works with US30 and it works with NAS100. I have not tried it with the DAX yet, but please feel free to test it. And I have not tried it with like some of the other like the Hong Kong 100, things like that. You guys can feel free to go ahead and test it, but I know for a fact it works with the major US ones, which are US30 and NAS100. It does work with gold, but I'm still working a little bit with the data, so I have not released that to you guys yet, but I will get that out to you guys in the near future. It also most likely will work with Forex pairs, but I'm trying to find and narrow down the best pairs and the best sessions still. So again, be a little bit more patient with me. If you have a specific pair that you like to trade or a time frame you like to trade them, by all means, feel free to do your own testing if you want it done sooner. But if you're just kind of curious, you're going to have to wait a little bit longer. All of this is being tested and revamped for the people in the trading floor. So if you guys are members there and you want to know this data, all of the data is being currently back tested and forward tested for the month of July, and that will be out to you guys the very beginning of August. So you will be able to see all of that come August. Okay, and very last question you will ask me is, what time frames does it work on? The answer is all of them. However, you have to make sure that you are correlating your time frames correctly. So if you are entering in on the 1 minute time frame, you need to use the 5 minute time frame as your higher time frame. If you are entering in on the 5 minute time frame, you need to use the 15 minute time frame as your higher time frame. If you want to enter in on the 15 minute time frame, then you will use the 1 hour as your higher time frame. If you use the 1 hour as your entry, you will use the 4 hour as your higher. If you enter in on the 4 hour time frame, you will use the daily as your higher time frame. I know for a fact that this works with the 5 minute as an entry and the 15 as a higher. I know that it works with the 15 minute as an entry and the 1 hour as a higher, and I know that it works for the 1 hour with the 4 hour as the higher with these specific settings. If you want to use 1 minute as your entry time frame or the 4 hour as your entry time frame, you guys will need to do your own back testing. I have not back tested those time frames, so you please do your own due diligence, back test it before trying it out. You may need to tweak the settings a little bit to adjust to those time frames. But if you are looking at 5 minute, 15 minute, or 1 hour, this will work for you with these settings. I will be showing you guys the data on the 15 minute as the entry time frame, the 1 hour as the higher time frame that we are using. You can see on the bottom here, I'll get more into it at the end of the video, but the overall win rate for this, and that is testing every single session. So for all of June, we tested every signal that met the criteria, and the overall win rate was 60%. The reward that we went for as a standard reward to test is 1.5%, and the overall gain on the account was 15% for the month. If you guys wait to the end of the video, I'll break it down in like the data sheets that you're used to seeing in the videos where we show it and then each session, like what each session did. So you guys will see like why I personally do like this strategy. I am a mixed trader, like I trade during New York session, but the first half of it, and you'll see at the end, like mixed session by far does the best with this strategy. So for me, this is a very good strategy, has a really high win rate, and doesn't really require you to sit on the charts all day long. So you guys will see that at the end. So as far as the rules go, I kind of gave you guys a basic layout here to follow along, but rule number 1 is just going to be literally load the indicators. Super simple. I'm going to show you version number 1 first. Version number 1 is if you have the Happy Trail indicators. So if you have the Happy Trail indicator that comes with the trading floor membership, if you have it, you will just go into your indicators, go under your invite only scripts, and grab your Happy Trail and load it on your chart. The other one that you are going to need, it's called Consolidation Zones Live, and it's by the Lonesome, and you want to click on that one. Add that to your charts. You should favorite it so it'll be easy for you to find in the future. That's the only two that you're going to need for right now. The other one you're going to need is the basic stochastic RSI once we split our screens and get into the strategy, but I'll show you guys that once we start because that's the same for both versions. Again, if you are using like Free Trading View or something like that, you only need these two indicators, and then you'll need a third one once we get into it, but you can totally use Free Trading View with this version of this strategy and still be fine. Version number 2, where you will just be trading Happy Trail but with all of the free indicators, has a few more indicators that you're going to have to add on. So what this will look like is I'm going to hide all this. So now this is version number 2. If you're a TTF member, don't worry about this. You don't need to know these. If you are looking to trade this and you're not a trading floor member, then this is what your indicators are going to look like. You're going to add on a twin range filter. So come in here, just type in twin range filter, and you can click on the first one here. This one's fine, and just add that on to your charts. The other one you're going to add on is a TSI. Just a basic TSI is fine. So you guys can just add on any TSI. It doesn't really matter. Just the regular one, standard one is more than good. So just click on that, add that onto your charts. Other indicator you will need for that version is the RSI, and then I will show you guys some of the settings here. To get the RSI to have the moving average in it, if you guys don't know how to do this, because that's basically what we have an RSI with a moving average that is also built into it. If you don't know how to do that, I will link a video here in the right hand corner, and it will explain to you guys how to go ahead and do that. But as far as the actual settings and everything go, this is what your RSI settings will look like. You'll have an RSI length of 150, source is closed, your moving average is going to be an SMA, the length is 35, and then the standard deviation will be 2. That is all you need to have. You can pick whatever colors you would want. Nothing else really needs to be on there, and that's all of the settings there. For the TSI, we're going to be working with pretty standard stuff here, so you guys can screenshot your settings if you really want to know, but most of the time this is default. And again, colors, you guys, this is just customizing how you want it to visually look, but your inputs would look like this. And click OK. And then for the range filter, the twin range filter, you will need to adjust your settings slightly. So you're going to have closed source, fast period 27, fast range of 1.6, a slow period of 55, and a slow range of 2. Then you're also going to have the style tab here. As you can see, this shows up as a long and short on your chart. So you have a short for shorts and a long for longs. But this, in the past, you guys, if you came from older communities, probably saw them as stars. And if you are using Happy Trail, this is part of what will have the smiley face print. So one of the things that has to be met in order for a smiley face to print is that there has to be a long or a short symbol that print. Okay, so that's the indicators that you're going to need for version 2. So you're going to have the twin range filter on, the TSI on, and the RSI on if you're doing the free, completely free, you're not a member of TTF version. So now at this point, you guys should know which version you are trading. So you're paying attention. Version 1 is you're trading the trading floor version with the smiley faces. Version 2 is going to be that you are trading it with the indicators I just showed you how to load on. You also, at this point, should know what time frame you want to trade on. Like I said, I know 5 minute, 15 minute, 1 hour, 100% will work and are profitable with this. 1 minute and 4 hour, anything different than that, they need to be tested by you. Remember that. Don't know if these settings will work. They might need to be tweaked. I'm going to show you guys the 15-minute time frame for entering and the 1 hour time frame for the higher time frame analysis. So I'm going to go through this. You guys kind of can see a little quick glimpse of the rules here, but I'll explain it in the examples that I'll show you. I will show you an example of the version 1, and then I will show you an example of the version 2. So just make sure you know which version it is that you need to personally be watching. Okay, so now that I've shown you guys how to set up all the settings and the indicators, I'm going to walk you through version 1 here. Version 1 is going to be, again, like I said, for those of you who actually have the Happy Trail indicator, who are members from the trading floor community. So this version's for you guys. If you're going to be using version 2, still watch this, because I'm going to run through at the end how like your stuff would all have to be agreeing in order to enter, but the concept and the rules are all still the same, as well as the multiple time frame. So what you're going to do first off is make sure you just have the right indicators on for whatever version you're trading. So for version 1, all you're going to need is Happy Trail and the consolidation zones on. And so for those of you who don't know, the consolidation zones indicator is these like blocks that you're seeing here that have like the lines above them, the dotted lines. I'll turn it off so you guys can see. But when I turn it back on, you'll see that that's what it looks like. That is basically showing you very mini consolidation zones or very small support and resistance areas that have been forming. So you'll have a little support area down here and a resistance area up here, very mini ones, but happening on the current time frame. And then when the breakout move happens, it's a little bit easier to identify. If you guys have watched that video, like I said, where I show how I manually do this for each individual smiley face, please do watch that. This indicator is just here to help guide you in case you struggle with feeling confident enough in your own markups like I show in that video. If you still need help with it or you need that extra confirmation, that's what this indicator is here for you to do, to help kind of guide you a little bit. But you have to make sure that you're still using your own eyes and your own analysis to make sure, like, does it make sense? Like, does the breakout actually make sense? Make sure you're confirming that before you actually take the trades. The other indicator, like you guys know, is already the happy trail one. And in order for the smiley face to print, it needs to have the twin range filter, the TSI, and the RSI all in agreement. So they either need to all agree for a buy or a sell for a smiley face to print. A regular smiley face facing upright is an indication for a buy, and an upside down smiley face is an indication for a sell. The other indicator you are going to need is the stochastic RSI, but that is going to go on the 1 hour time frame. That's if you're trading the 15-minute entry and the 1 hour for the higher time frame. That's what I'm going to show you guys here. So as you guys can see, I am on the 15-minute time frame for this chart. I am on US30 because that's my bay, and that's what I did all of the data on. That's what I personally do trade. I was doing all of this backtesting data for my own personal trading. So I'm sharing this with you guys so you guys see how I trade this style and this version of it. But I am going to show you guys on US30. Again, it works on NASDAQ 100. I'm just showing you US30 because that's what I did my testing with. What you're going to need now is to split your screens. If you have dual monitor set up, by all means, go ahead and use 2 different screens. But if you are working on one screen, it is possible to split your screens on one screen on TradingView, and you can still follow along. So what you're going to do is come up to this little box up here on your TradingView, click on the select layout, and then you're going to grab the number 2 option, the first one, and this is going to split your screen in halves. So here on the left-hand side, we have our 15-minute time frame. And then here on the right side, we'll click on that. And I'm going to have you guys click on 1 hour. So that will bring up the 1 hour data on the right-hand screen. And that will bring up the 15-minute data on the 15-minute time frame. Make sure that both of them are trading on the same exact thing. I've seen this happen by accident sometimes. Make sure that you're on whatever pair you are trading this with on both screens. What you'll need to do on the 1 hour, come to your right hand screen on the 1 hour, click on indicators, and we're going to add in the stochastic RSI. Click on that, add it in, and you're going to use default settings, but I'll show you guys just so you believe me. So we have 3, 3, 14, 14, and closed source for our RSI. The style can be whatever you guys want, and that is all you need to have there. We don't care about the market at all. So everything over here on the 1 hour, I do not care about what it's doing. I simply care about the 1 hour stochastic RSI and whether it will be crossing in the correct direction for us when we are entering on the 15-minute time frame. All right, so coming back to our 15-minute time frame, the one we actually care about, let's look at some examples here. I'm going to show you guys an example of a sell. So we're looking at our market. The number one thing we want to see happen, number one rule, is you need to have a smiley face. A smiley face needs to print to be able to signal to you that something's happening. You can set alert for these, so I do set an alert, and that's part of the reason I like the 15-minute time frame. It's like just enough time for me to be able to get an alert, come look at the market, see if it meets the criteria, still get all my trades together and the risk management and everything calculated, put into the calculator into MT4, and get the trade on time. Sounds like a lot to do, but if you guys get used to it, it will go faster. But basically, I like to have a little bit of time. On these much smaller time frames, like 1 minute, 5 minute, you really need to be sitting on the charts watching, and the alerts don't always come through as fast as you want from TradingView. But for 15-minute, I find that it kind of works pretty well with this. So anyhow, you need the smiley face alert. So in order to do that, you click on your happy trail indicator, click on the 3 dots, then click add alert. You can leave it as any function, which will mean that you will get a buy and a sell if you click any, but if you only are looking for buys or only are looking for sells, then you can individualize it. But if you leave it as any, you will get an alert every time a smiley face prints, whether it is a buy or a sell. Choose how you want to be notified and click create. That's what I typically do. I wait for the alert, and then the little alert will come through. I'll get the smiley face. Now I can come and look at the market and see what is it doing. Is this a trade I'm interested in taking? So as you guys can see here, the consolidation zone to the left is kind of trading within the area. I'll mark it up, this area. So if you guys need to extend it out, because maybe it just give you small blocks. If you need to extend it out some, you can. But you can mark it up with a line. So as you guys can see, the smiley face that prints here, and it closes, candle, and breaks that consolidation zone level. If you weren't sure, you could have waited for one more candle. I do have like a 1 candle rule on that previous video you guys have seen where like you can allow 1 more candle for confirmation. So that is okay. And as you guys can see, this would be a valid entry. The reason is you have a smiley face that's printing for a sell and it has broken the consolidation zone. Like I said, whether it was this candle or this one, either way, it does break it. And you want to make sure that the bodies are breaking it, not wicks. It has to be a body. The body has to close under it or above it with a smiley face to be a valid trade. You are also only using the most recent zone to the left. We don't care about like this zone down here and a smiley face way up here. You only care about the most recent smiley face that prints when you would get an alert or when you would see it pop up, and whatever the most recent zone to the left is. And does that smiley face print within this zone, and does it break it? If the answer is yes, then you can look at your 1 hour time frame now and see if the 1 hour time frame will validate it for you. So in order to do this, we'll come to our 1 hour time frame. Sometimes it's easier to do this, so I'm going to teach you guys like what I do. Sometimes you get lost trying to compare the 2 different time frames. Grab your vertical line, and if you just drop the line on this smiley face where you'll be entering your trade, it will automatically drop it on the correct 1 hour bar that you're looking for. That puts it directly across your stochastic RSI. So wherever the line is vertically crossing your stochastic RSI, you can just peek and see, does it make sense? As you guys can see here, I'm circling it for you. Sorry for my poor circle. You guys can see that it does cross in a downward motion. That means that the higher time frame on the 1 hour time frame is confirming that yes, we are in an overall downtrend. This is a safe trade to potentially take in that direction. So that is a approved trade that we can now enter into a short on. So you would mark it up at close of candle. For this example, since we are selling, we're going to put our stop loss at the top of the previous consolidation zone. So this zone here, to put it at the top of that consolidation zone. And then you're going to target 1.5 for your reward. And as you guys can see, that's a winner that you do get. So it went a lot further, but you guys see you could have trailed or whatever you wanted to use. But a little trick that I do like to do is just to look to the left and see, does your 1.5 make sense, like with market structure? And in this case, it makes perfect sense. Your 1.5 is literally lining up with a previous zone over here, and that looks perfect. So you guys definitely could use that. And once you hit 1.5, if you are intermediate to advanced type of trader, you definitely could look at trailing it once it maybe broke this zone. So say the market comes down, breaks that previous zone. At that point, maybe you could like move your stop loss to just like trailing by maybe 1% or so, and then continue to go. That's optional, and that is not something that I have tested it with. That is something that I just personally do as a more experienced trader in my own trading. I always use a consistent take profit when I'm back testing if I don't have any other solid like exit rules. So I always go for at least a 1.5 before I would ever consider trailing. So you guys are definitely free to play a little bit with the risk management, but I know that if you just want to target 1.5, it is profitable, but there is definitely a lot of potential to trail a lot of these, hence the name Happy Trail. And as you guys can see, that was like a huge drop there, but you guys definitely could have targeted zones along the way, consolidation zones along the way, if you're not really sure, and you could have just used it that way to trail as well. But 1.5 is more than enough, and you'll see in the data that is all I did in order to be able to get those results that you'll see, and it still was very profitable using just 1.5. So that's an example of a sell. I'm going to get into an example of a buy for you guys. Okay, so here we are. We're going to look at an example of a buy. So looking here on our charts, what I want to show you guys is a little bit of a more complicated scenario, but there are rules that it still meets it, and I'll explain why. So when we're looking at the market here, you guys can see here is our previous zone that we are looking at, and we're going to pretend that this is our smiley face we got the signal on. So you get signaled for this smiley face, and you're looking for your most recent zone. And your most recent zone is here, this area, between that high and between this low. So this area is your most previous zone that you are working with. Even though the market kind of broke out of it down here, there was never any smiley faces that were upside down to show that there was a sell potential. So there's nothing valid here. You don't have to worry about it, even though the market has kind of already pushed up a little bit. You're just worried about the most recent zone to the left. That's this zone here. And the most recent smiley face, and that's this one. So what we're looking at is one candle past it. You can see that it does break it. There is an exception a little bit to this version of it. And the exception is that you just need price to break it. But I don't want to tell you guys to go like 4, 5, 6, 7, 8 candles past it. That's a bad idea. However, if price is kind of bouncing around this zone and it's like taking a little bit, maybe 1 or 2 candles, maybe even 3 candles to kind of like push up past it. And what I mean is like price is really like small little guys that are just kind of opening and closing in the same area, and then it finally pushes up. If that's the case, you could still potentially take that trade. But for the most part, it's safer to just wait only one candle, because that means the momentum and the volume that you want are finally there. Try not to like take trades way late, because I think it could be a bad habit you guys may get yourselves into. But if price is bouncing and it's opening and closing at the same exact price range that this smiley face candle has printed on, and it has finally taken a couple of candles to break out of your previous zone, if that's the case, and it's more than just one candle after, you can still probably take the trade, but just make sure that you're being a little more cautious and understanding that there is a little bit more higher risk with those trades. But they are still valid to take. And I'll keep getting back to the example now that I've explained that. So anyhow, we have the one candle rule, which it totally meets, and that's okay. We break out on this candle officially. The smiley face comes up to the zone, but it doesn't officially break out there. We need to wait one more candle, and that's okay. So our entry candle is technically here. So we're going to go for a long. Enter at close of candle. Our stop loss, in theory, would be all the way down here, right? But there is a little bit of a rule here. When I was backtesting, like I said, I like to have set rules, and I don't personally think that 100 plus stop loss on this time frame with this strategy is very good. I think that some of the zones, as you guys will see as you're practicing with this, can get pretty massive, and the stop losses just aren't practical for somebody who is actually a day trader who likes to enter into their trades during the day and get out of them by close of market. So I personally don't love 100 plus stop loss for this particular strategy. I have kind of been working with this, and Jay, who also helps me with backtesting data, we've decided that like having the zone when it's 100 plus, so if it is 100 plus or more stop loss, what we look to do is half the zone. So we'll look to the zone to the left, the zone that we're working with, and as you can see, there's a little yellow line there. It's half of the zone. And we will just put it midway through the zone for our stop loss, because this stop loss, if we use the actual one was 150, we want to go midway instead, which puts us at 82, which is fine, and then target 1.5, which you can see you get here. That is just something we've been working with, and that's how we back tested it, just so we don't have some massive stop losses for some of these zones. So it kind of keeps you a little more in check with your stop loss and a little more realistic with your take profit, so you can get in and out within a few candles and not be in these trades for like days. The idea of the strategy is that it is a breakout strategy of price, and that you should be moving with the volume, with the momentum of the market, and kind of capturing this and not being stuck in these forever. Granted, some of them you do end up getting stuck again in consolidation or holding on to, but the concept is to not have to be stuck in these for days and days. This isn't like a holding strategy, unless you are going to trail beyond 1.5. Okay, so as you guys can see, you do get the win here, and that is an exception that I wanted to show you guys, that it can be valid still, even if it has kind of broken out on a previous level, because there was no previous smiley faces. And also, if you have a stop loss that's greater than 100 points when you're doing this, like here, 155 is too high. You want to go under 100. The way that we tested it to stay consistent with our back testing was to just half the zone that we are working with. So that is what that looks like. Okay, so now I'm going to show you guys some example of trades that you shouldn't be taking and explaining why you wouldn't be taking them. So as you guys can see here on our left-hand side, we have a zone. So this is our blue box. Just a quick FYI, you guys will see with your data feeds, because the way the indicator is just coded with the data feeds depending on how much data you can get. Anyhow, what you'll see is that you will get like the red dotted and green lines when you're like more in the current market, but when you are back testing, all you're going to get is the blue boxes that shaded them in. That's okay. They're the same thing. You're just not going to see the little dotted lines forming like you would in the like live market and the most current markets when you're back testing this. The blue boxes are still the same area that the dotted lines were in. So what you guys will see here is some trade examples that weren't valid trades and just run you through why. So as you guys can see, this is our zone that we were working in, this blue box. And this smiley face prints, and basically it's not a valid trade. It never actually breaks out of the zone. So at no point was this a valid trade for you to take. So this smiley face was never a valid trade. Make sure you remember it has to be the body of the candles that have to break out and close above or below the zones. Again, here you can see we get a little bit of a drop. We get a upside down smiley face and a nice strong candle, but again, never actually breaks the zone. The wick touches the zone, but the body never actually breaks out of the zone. So not a valid trade. Then you get some consolidating again happen, a new consolidation zone that prints for you. So we're looking for a new smiley faces. We finally get a new smiley face on this one that breaks out. So by all the rules for the 15-minute entry time frame, this looks like a valid trade. You had a zone, you had a breakout candle, the smiley face printed within the zone, breaks it out, and looks like a good entry. So your next thing you would do is look to see, would this be a valid trade on your 1 hour stochastic RSI? If you guys can see when I'm hovering over this line here that marks this candle, on the 1 hour time frame on my right, you can see here, like if I move it a little bit, you guys can see where that dotted line is lining up. So this is our line that we are looking at for our stochastic RSI. When you zoom into the stochastic RSI, you can see that the crossing is actually in a downward. So at the time when you would be looking at this, the K and the D line would actually be crossing as if it was ready to go in a downward motion. So this actually would not be a valid trade for you guys to take. You want to see like a nice clear crossing upwards, and in this case it looks like it's getting ready to cross downwards, and that would not be a trade that you take, which is why that is not marked up. So you would not take this trade, even though it meets all of the 15-minute time frame entries, which is actually a good thing because it is likely that you would have been stopped out and lost here. So again, the stochastic RSI on the higher time frame is there to help you. So that showed an example of a buy, a sell, and some examples of like why you're not taking trades, because you're not going to take every single smiley face and just look to the left. You're going to take the ones that actually break out of a zone that was to the left, not just because they're there. Like you're not taking them just because they're here and using a one to the left. You're using whatever the most current smiley face is and whatever the most current zone is that is on the screen. And you have to be breaking out with the body breaking from the zone, not just wicks. And also the stochastic RSI has to be in agreement on the higher time frame. That is the version if you are trading this with Happy Trail, the indicator itself. So now we'll get into version 2. I will quickly run through the confluences, but the idea is all the same. Okay, so for those of you trading version 2, all I've done was turn on your indicators. So make sure you have your consolidation zones on, same thing we went through in the beginning of the video. Have your twin range filter on, all the settings I showed in the beginning of the video, your TSI and your RSI on. This is going to have to be on your 15-minute time frame, and then on your 1 hour chart, you're going to split your screen the same way I showed with version 1, and you need the stochastic RSI with your default settings added onto your 1 hour time frame. Same thing as on the previous version. So showing you guys an example of a sell. What you're going to need in order to have all the confluences met in order to take a short, you will need to have a short symbol print. And you will then look to the left to see your consolidation zone. Like what is the most previous consolidation zone to the left? You want to make sure that the short that is actually printing is breaking out of the zone. So close of candle breaks out of the zone. It has to be the full body of it, and you can get like a 1 candle leeway or so. Or as long as price action is kind of bouncing in that same exact area of price, eventually when it breaks, that's okay. Again, it is a breakout strategy, so as long as the break of price is happening through the previous consolidation zone, that is okay, but proceed with caution. It's best if it happens on the actual signal for the long or the short candle happening, or one candle afterwards. Use your own judgment, make sure you're testing it, but I definitely think it's best if you're just learning this that you just stick with the ones that actually break out, or using the one candle rule. Okay, so as you guys can see here, we have the short, and it does ever so slightly break out from our consolidation zone, which we had seen. So our consolidation zone, when we mark it up longer, you can see the short does close. That candle does very ever so slightly close below it and break out. If you want to wait the one candle rule, that's okay. You do get a little bit more of a push with that, and you get that full confirmation. If you're a little unsure here, you do get it here with this candle. So what you see there is that you have the breakout. So that's your first rule that's met. You have your first criteria. You have the short symbol. And then your second criteria is that it has broken out. So you have met those rules. Next, what you'll need to do is click your little vertical lines. I like these just to keep it easy for you guys to see. We're interested in entering in at the close of the candle that breaks the consolidation zone. And what we want to then confirm is that our TSI, since we are looking for a sell, is red, and it is, and that our RSI MA that we have down here is crossed below. So you'll see we have this yellow line here, which is like your moving average, and then we have the RSI, which is the purple line. We want to see that they have crossed. And in this case, again, since we are looking for a sell, it should be crossing in a downward motion. So we have the short, the breakout of the consolidation zone, the red TSI, and we have the MA RSI crossing in a downward motion. So all of the confluences we need for the 15-minute time frame have been met, and we are now good to confirm that the 1 hour time frame stochastic RSI is good to go to allow us to trade with the higher time frame trend. So we now look at our Stoch RSI on the higher time frame. It is indeed crossing in a downward motion, and then we can look to enter into this trade. So we would take a short, enter at close of candle, stop loss goes where your consolidation zone is. So if you are going for a short, you're going to go to the top of it, and then you're going to target 1.5. And just like the other one, if you like to use zones or things like that, like looking to the left to make sure that does your 1.5 kind of make sense where it's at. In this case, it does, so we're fine with that. And again, if you wanted to continue trailing, as this is like a huge drop, you could look to trail after you get to 1.5 and look at maybe like taking partials or trailing or whatever you want to do. But it also is not necessary for this version either. You can just stick with 1.5 and you would still be profitable. So that's what that looks like. Just so you guys can see that it does all line up, I will throw on the happy trail. So you can see where you get your short and where all of that would have been entering. We still get our smiley face. Just so you can see, like, the indicator is giving you the smiley face when all of that is met. So that's the idea. You just, instead of you having to do all of this on your own, you just get the little smiley face when they're all met. But if you want to do this without the happy trail one, and you just want to do it separately, and you just want to line up all three of them and then confirm with your fourth indicator over here, you absolutely can do that too. Just so you guys can see, they're always going to line up for you. We're not BSing you guys. I'm not trying to sell you any kind of like lies here. They really are lining up. That's what the indicator is programmed to do. Okay, so anyhow, that is what it looks like with a short. Let me show you guys an example of a long. So here we can see we have an example of a long that would be happening. So you have your previous zone, which is right here, your red and your green. That was your previous consolidation zone. And what we can see is we have a long that prints. So we don't break out on the candle that the long prints on, but you do break out on the next candle. Again, the one candle rule applies, and it is definitely okay to use. So if you mark it up and we have a very small breakout, but you have a breakout of that, so that is okay to take. What you would look at then is to confirm that your TSI is green and crossing upwards, that your RSI and MA are crossed and they are in an upwards motion. We then need to confirm that our 1 hour time frame stochastic RSI is indeed good to go. So we'll look at our stochastic RSI on the 1 hour, and it actually is not good to go. So this is not scripted. I do not cherry pick these trades. This is a poor example to show you. I apologize, but in the long run, it's actually a good example because this is real life. So you would not take this trade, actually. It does not meet the criteria for you to take it, even though all the 15-minute was met. You're not going to take it based off of the 1 hour because your stochastic RSI is actually crossing downward still. So if I zoom in here, you guys will see your K and D are still pushing downwards. They have not crossed upwards until the following candle. So you are not taking an entry here actually, and that's okay. So, I'll show you, this actually works out for the best for you because this probably would have been a loss. I'll mark it up just so you guys can get an idea. If you had taken it and you didn't listen to the Stoch RSI on the 1 hour time frame, so say you hypothetically entered here, your stop loss, you should be using the consolidation zone. So when we're looking at this previous zone, the bottom is here. However, that's over 100-point stop loss. So then we would half that zone. So if we're kind of looking at halving the zone, this is your top here, this is your bottom. We're about halfway there when you're looking at it here. So somewhere like right about in there, probably is like your halfway area. We then target 1.5, which you don't get, and it looks like you would be stopped out. So the Stoch RSI is actually a friend here. It keeps you out of a losing trade. You get very close to hitting it, but you would get wicked out here on this little wick. And that's just how it works. And that's okay because you do end up getting like another opportunity over here. You get a long where everything probably would have worked out for you. So anyhow, that actually kept you out of a losing trade, but that would have been an example of how you would have looked at potentially entering into a long, and in that case, you would have not entered because of the stochastic RSI not crossing in the correct direction, but you guys get the concept of all the confluences you would need to look at in order to be able to enter into a trade. Just like I went through with the first version of why you wouldn't take trades, they are all the same when it comes to trading it, the second version. So you need to make sure that your short and longs are actually breaking out in order to take them. If they don't, they are not valid. So for instance, here you have a short that does print in this consolidation zone, but it never breaks out of it. It just kind of touches around it. Again, the next candle does not break out of it. And there's no breakout that ever happens. And then a new consolidation zone prints. So this is no longer valid, and there's no trade there that ever happens. And that's okay. You would just wait for a new zone to print and another setup to present. Again, here, it never actually breaks out until way up here. And at that point, the price is too far gone. You guys have already lost the move. You have one candle rule, or if price is ranging in the same exact area. This price up here is not the same price as down here. So this is not a valid trade. Although it does take off, it's not your trade. It doesn't meet the criteria. Okay, guys. So quick screenshot again here, just to kind of run through your rules so you guys understand them, whether you're using version 1 or version 2. Let's get into the data now. So you guys already saw, I told you earlier on, the overall win rate for June, trading everything 60%. That was using a standard 1.5% reward, and the gains on the count for everything was 15% when you traded every session. Here we go. So you guys are used to seeing these type of data sheets that we do where we like fill in all our trades. So we always kind of just use a 100K balance. It's just easy to do the math and for people to kind of see. So 100K starting was your balance. Assuming you're taking a 1% risk for every one of your trades, and you're also not compounding on this. We don't compound on them, so if you compounded on your account, it would be even more, but we don't do it. 15% gain, so you would have had 15K gain if you traded with that kind of balance, so you would have made 15K in the month of June. You had a 60% overall win rate. 18 wins, 12 losses. We don't have any break-evens in this strategy. There was 30 total overall trades for the month of June for all of the sessions that actually met the criteria that would have been tradable. This is really all you guys need to care about. Beyond that is just the sessions. So London is not fantastic, but there's also not a ton of opportunities. So there's only 4 actual opportunities during the month of June. And it was kind of like 2 wins, 2 losses, 1% gain. I would not personally wake up to trade London session for this, but that's expected because these are US indices and not London. They're not the DAX or anything like that. So if you're looking to trade DAX, you may see different win rates during London. So you would have to test that yourselves. As you can see, my beautiful mixed session, which is my favorite. If you guys don't know what mixed is, the mixed session is when London is still running and New York is opening. So you have 2 sessions running. It makes sense that mixed session would do well. Typically, breakout strategies do very well during mixed session because you have the volume and volatility now of 2 markets running. So I typically do trade during the mixed session. For me personally, with the indices is 9:30 a.m. Eastern time until about 12 p.m. Eastern time. So typically that's where I'm finding most of my setups. Some of them may run longer into the day, but that's usually when I'm coming into the markets and looking for a setup. As you can see, mixed session does extremely well. So there are 7 total opportunities to take trades. You have an 85.71% win rate with it, 6 wins, 1 loss, 8% gain on the account. So for me personally, because I do trade this is, you guys can see why I like this strategy, because this is what I trade. I personally actually trade mixed session, so that is something you guys would see, like that's my results, and that's why I show you guys this, but I am breaking it down for all of the sessions so you guys kind of get an understanding. But yeah, this is definitely by far my favorite, and this is why I personally like trading Happy Trail like this style. New York, which is this end of the New York session where it's just New York running, doesn't do fantastic. You do get a lot of trade opportunities, but you actually have negative 2% gain and a decent amount of losses, which again, if you're thinking of it from a breakout point of view and volume point of view and trying to get the market to somewhere quite quickly, it makes sense that the end of New York would struggle with a strategy like that, because all of the volume and all of the traders, they're all here. They're all awake during the overlap of, they're all here with mix. They're all awake during the overlap of London and the beginning of New York. They're not really hanging around towards the end of New York. The volume and momentum you would need to push that trade in the correct direction for you to hit your take profit isn't really going to be there during the end of New York, and it's usually definitely not there during the beginning of Asian session. So you guys definitely probably will see more losses here. I don't suggest trading the end of New York. Asian session actually does surprisingly well, considering there's not usually that much volume there, but you guys can see you have 8 wins, 4 losses, 12 total trades, a 66.67% win rate, 8% gain on the account as well for the month of June. So that's actually pretty nice to see that this worked out well for it. And yeah, so that's the results for this, what you guys can see here. And obviously the 15% gain is if you trade it 24/7. Not really practical with this strategy because most people need to sleep. But as you guys can see, even just trading like the higher win rate sessions, the mixed and the Asian session, like they do very well. And that's only a few hours out of your day that you would have to come on, sit down, set the alerts for the smiley faces. You don't got to stare at the chart all day long. Set the alert, just peek at the chart. Did it break out? Look back at your zone. Does it make sense to enter? If it does, you take the trades. So, you know, as you can see, like 7 total trades for the whole month of June. Like you're not staring at charts all day long, and I wouldn't do that. So if you guys know anything about my style of trading, like this totally fits my lifestyle and the way that I like to trade. I don't like to trade every single day. So something like this style strategy makes more sense for me. I can set an alert. I'm not over trading. I only need a few trades in the month, and I can more than make the percentage that I want to make, and I have a really nice win rate. So for me, this is like a beautiful strategy, and I really like it. So this is only the month of June. If you are in the trading floor community, I did do a live stream with Jay where we went over like something similar to this version. And you guys also saw on YouTube with that previous video, like I was talking about, just showing one time frame. I believe that was like 8 to 9% gains. I can't remember, sorry guys, but I'm sure somebody does. Either way, it was positive, and I was basically just showing you guys how you can like filter out trades using that on just one time frame. This is showing you guys how to use an additional time frame to filter it again even more. That did show you guys the month of May though. So I know this is only showing June, but you guys, if you check out that video, you can see the month of May, the similar concept and the strategy and everything like that. So there's definitely data beyond just 1 month for those of you who are like, it's only 1 month of data. I'm just showing you guys how I personally backtest. I'm just sharing this with you. You're ultimately always responsible to backtest for yourselves, but just letting you know, there is June data, there is May data floating around, there was April data. We just don't like do this out there to the community. These sheets are just my personal sheets that I use for my own markups, but just letting you guys know there is definitely data to support this, way more than 100 trades to show that this is a profitable strategy. So you guys feel free to test it yourselves, play around with it, whether you're using version 1 or version 2. Let me know in the comments below whether it works for you, if you're liking it, if you're finding something else that maybe works a little bit better. I'm always open to hearing more about how the strategies are playing out for you guys. So best of luck with it, and I'll see you guys in the next video.